Before we start, nothing in this video is financial advice. All data is pulled directly from Adobe's SEC EDGAR public filings. I am a self-taught investor who measures portfolio performance in gold ounces, not dollars. That single shift changes everything about how I evaluate a stock. Let me show you why. Adobe is down 66% from its all-time high. I think that is a buying opportunity. Here is the data that convinced me, and the two things that would change my mind. Adobe peaked at $688 in November 2021. Today it trades at $235. That is a 66% collapse over 4 years, on a company still generating $8 billion in owner earnings annually. Look at the HARSI at the bottom, negative 32, deep oversold territory, levels last seen at the COVID crash and the 2022 bottom. Both were generational buying opportunities. The candles say the trend is still down. The oscillators say the sellers are exhausted. Those two things cannot both be true forever. One of them is about to be wrong. Adobe makes the software that designers, businesses, and creators use every single day. Photoshop, Acrobat, Premiere Pro, Illustrator. Over 30 million paying subscribers across 180 countries. Here is the key thing. Once someone builds their entire workflow inside Adobe, switching away is so painful and expensive that most people never do. That is called a moat, a competitive advantage that protects the business from competitors. Now the numbers, straight from Adobe's public SEC filing. Revenue, $24.4 billion, growing 12% every year. Gross margin, 89.4%. That means for every $100 Adobe earns, nearly $90 is profit before overhead. That is exceptional. Most businesses wish for half that. Here is the number that matters most. Adobe generated $10.3 billion in real free cash flow last year. But here is what most people miss. Adobe paid its employees $2 billion worth of stock last year. That is a real cost to you as a shareholder. Your ownership gets diluted every time new shares are issued to pay staff. So we subtract it. 10.3 billion minus 2 billion equals 8.3 billion in owner earnings. That is the cash that genuinely belongs to shareholders after every real cost is counted. That is the number we value the business on. Now let's talk about what you are actually paying for those owner earnings. Adobe's enterprise value, the true cost to buy the entire business, is about $95.5 billion today. Divide that by 8.3 billion in owner earnings and you get 11.4 times. In plain English, you are paying $11.40 for every $1 of real annual earnings Adobe produces. Here is why that matters. At the peak in 2021, this number was above 50. The stock didn't fall because the business got worse. It actually got much stronger. The stock fell because the multiple collapsed from 50 down to 11. That compression is the entire story of the last 3 years. And for a business with these characteristics, 11 times is historically cheap. One more thing. In April 2026, Adobe's board authorized a $25 billion stock buyback program. That is management saying on record, this stock is cheap. So what is Adobe actually worth? We use something called a discounted cash flow model. The idea is simple. If you know how much cash a business will generate in the future, you can calculate what it is worth today. We run 3 scenarios using Adobe's verified owner earnings of $8.3 billion. Bear case, slow growth at 4% per year. Everything goes wrong with AI competition. Intrinsic value, $368. That is 55% above today's price. Base case, steady growth at 8%, roughly what management guidance implies. Intrinsic value, $563, that is 137% above today. Bull case, AI monetization kicks in, growth accelerates to 14%. Intrinsic value, $938. Here is the key takeaway. Even the pessimistic scenario, where things go badly, still values Adobe at 55% above what you pay for it today. But here is the other side, and it is real. Risk number 1. Adobe's CEO, the man who built this business over 18 years, is stepping down. New leadership always brings uncertainty. Nobody knows yet who runs Adobe next. Risk number 2. Artificial intelligence is changing creative work fast. The threat is not Canva replacing Photoshop for professionals. That is not happening. The real risk is that AI removes the need for the profession entirely. If a marketing team can generate finished content with a text prompt, they may never open Photoshop at all. Risk number 3. The stock is already down 28% just this year. Sometimes a falling stock is cheap. Sometimes it is falling for a reason. Both things can be true at the same time. The fundamentals make the case. But these risks are real. That is why you do your own research. So where does that leave us? Adobe is a fundamentally strong business, growing revenue, exceptional margins, generating $8 billion in real cash every year, trading at historically cheap levels. The risks are real. CEO transition, AI disruption, a stock already in a downtrend. This is not financial advice. I am sharing the numbers so you can make your own informed decision. Here is what to watch. Adobe reports earnings on June 11th. The one number that matters most, business professionals' subscription revenue. If that grows above 12% year over year, the AI monetization story is real and the thesis holds. If it comes in below 10%, the market will punish it regardless of everything else. That will be the first real signal of where this stock goes from here. Follow for the earnings update. Before we close, one more question. Even if Adobe goes up in dollars, does it actually make you wealthier? Here is the problem with measuring gains in dollars. The dollar loses value every year. Inflation quietly erodes your purchasing power, whether you are watching or not, roughly 3% annually. So a 10% gain in dollars is really only a 7% real gain. And if inflation runs hotter, even less. That is why we add a second measuring stick, gold. Gold cannot be printed. Nobody can make more of it. An ounce of gold today and an ounce in 2 years represent the same amount of real wealth. Gold's job is to preserve purchasing power while everything else inflates away. Now, gold is not perfect either. Look at today. Gold just dropped 4% in a single session, down to $4,089.69. Middle East tensions and rate hike concerns. Even the fixed measuring stick has volatile days. That is the risk of holding gold. So here is the real experiment. Today, June 10th, 2026, we set 3 benchmarks. Adobe at $237.88 per share. In gold terms, that is 0.0581 ounces of gold per share. Gold at $4,089.69 per ounce. And cash, $1,000 sitting still, losing roughly 3% of its purchasing power every single year to inflation. In 2 years, June 2028, we come back and answer 3 questions. Did Adobe beat the dollar? Did Adobe beat gold in real ounce terms? And did gold preserve purchasing power better than holding cash? Because gaining in dollars means nothing if dollars are worth less every year. The only gain that matters is real wealth, measured in something that cannot be inflated away. Follow, and in 2 years we settle the score. So here is the think tank scorecard for Adobe. Revenue growing at 12%, pass. Gross margin 89%, pass. Owner earnings yield 8.67%, pass. Valuation at 11.4 times owner earnings, pass. And the gold benchmark, Adobe at 0.0581 ounces per share, locked in today. We settle this in June 2028. This is episode 1. Every video in this series adds another stock to the experiment. If you want to see whether Adobe beats gold in 2 years and which stocks make the cut next, subscribe. This is the Think Tank Trader. I'll see you in the next one.